This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on September the 6th, 2018. Our time is 8:14 Mountain. Connect with Harold at rarecoloreddiamonds.com or 1-800-432-1022. US dollar at 95.03. Canadian dollar 75.82. The euro at 1.16. The pound at 1.29. Gold is up a little bit today, $1,205. Silver at $14.25. Gold-silver ratio is the highest it's been since 2008, almost at 85. An article about that in our free weekly newsletter. Platinum, $791. Palladium, $983. WTI, $68.76. Brent, $77.61. Nat gas, $2.79. Bitcoin in US dollars, $64.65. In Canadian, it's $85.37. Bitcoin has dropped more than 1,000 over the last 2 trading days, and that is according to the Bloomberg Galaxy Crypto Index, the lowest since November 2017. The sell-off, which began yesterday, came after a report that said Goldman Sachs is pulling back on a near-term plan to set up a digital currency trading desk. The market may also be suffering from the fact that it's no longer the hottest investment around. That crown has been taken by pot stocks. Now the Dow is at 26,012, S&P 2,888, NASDAQ 7968, TSX at 16,137. And as I was explaining to Harold, the date for legalization of marijuana in Canada, we believe it's going to be October the 17th. NAFTA continues to be negotiated between Canada and the United States. The Trans Mountain Pipeline, which it's just an ongoing battle. The Court of Appeal here in Canada said that First Nations were not consulted enough. They put the entire Trans Mountain Pipeline on hold for now. And the big story that is breaking as we speak, Bob Woodward, famous for All the President's Men and bringing down Richard Nixon, wrote a book about Donald Trump. The New York Times had an op-ed from a person within the White House who is not named and says some very, very terrible things about Donald Trump. There are forces within the administration that are trying to stop his agenda. And Harold, Donald Trump is with Twitter today talking about finding this person who wrote the op-ed as they're an enemy within, and I don't necessarily disagree with him. It is a very crazy time in the United States.
Better believe it. I mean, a day doesn't go by that there isn't some type of controversy with him. A lot of people feel that he's doing an amazing job. And in actual fact, there are several things that Donald has done, that were very progressive and very good for the country. If you listen to him, he's taking credit for every single thing good happening within the United States. And where that may not be 100%, the fact is that his popularity has increased substantially as he's lowered taxes and done other things, especially with trade, where it may not be popular with our trading partners, with the U.S.'s trading partners. He has actually done a very good job in certain areas. However, he's very controversial. He's got a very big mouth, but I certainly don't blame him for wanting to find out who the mole is within the White House, that is trying to sabotage him. So it's not a good situation. He should be concentrating on the betterment of the country, not having to defend himself from somebody within his administration or within the White House that's trying to, hurt what he's doing. So I don't agree with that type of thing. And let's face it, I'm sure he will find out what the situation is. At this point, the markets have been basically lethargic. We're seeing gold trade in a range at this time. We broke back above $1,200 this week, traded I think as high as $1,210, but the market's basically trading in a range. The next major level to break is around the 1175 level. That's not a huge support level for gold. The biggest support level for gold is obviously at that 1,050 level that I've been saying, for the last quite a while. So we are looking at a situation where gold is dropping primarily because the U.S. dollar is strong. And that's going to continue at this point with the Canadian dollar trading at 75 cents and the U.S. dollar trading at 95 cents. The ratio between gold and silver is ridiculously high at 80 to 1. Gold more expensive than silver. However, don't forget that back in 1979-80, when gold hit 800 and silver hit 50, there was a time that the ratio between gold and silver was 16 to 1, and now it's 80 to 1. So gold has still a lot more strength than silver. In fact, silver is at its lowest levels it's been at for several years. Once it broke through 1500 and went into the low 14. So if gold does actually end up testing that 1050 level, if the US dollar does continue to strengthen, we could literally see silver back down in the range of about 11 and change. So if gold was to drop to 1050, where there's very heavy support, we could literally see silver trading in the $10.5 to $11.5 range, and that could easily happen. So the relationship between gold and silver has certainly deteriorated, with silver falling much more than gold, and gold is certainly holding in there in and around the $1,200 level. I wouldn't be shocked to see the gold market come down to 1,050, but I would be shocked if 1,050 was broken and the market fell further than that. In order for that to happen, I do believe that the US dollar would not only have to break the 103 level that we saw earlier when Trump first came into office, which is still about 8 cents increase from where the market is right now. So I don't think that that's in the stars over the short term. But again, you can never tell with this crazy market, and you can never tell what's going to happen with Donald Trump as a president. So right now the markets are trading within a range. Gold is trading within a range. Silver is at its lower end of the range. Oil market's trading between 65 and 70. The US dollar is showing some strength, but not in a massive bull market type of thing. So the only markets that really are moving at this point is the Dow Jones. The Dow is making, it's over 26,000 at this particular point. Could certainly go substantially higher, especially if the dollar strengthens. But there are certainly factors out there that could drop the market substantially also. One of them is the derivatives market, which is the biggest market, I believe, in the world at this point, as far as an unregulated market that is still not viewed as anything but a very speculative type of marketplace. So that's always been an area that I've been concerned about. But again, you've also got this gigantic debt that the U.S. is struggling with at this point. Anything happening with that debt could certainly send the market into a tailspin. The other thing that concerns me about the Dow is the fact that we haven't seen any correction from basically 2010. So for 8 years, we've seen this market rally without any type of real major pullback. That is certainly a concern, because when that does come, the drop can be substantial.
Connect with Harold. Learn about investing in hard assets. His website, rarecoloreddiamonds.com, 1-800-432-1022 is the number to connect with him. Bank of Canada held interest rates at 1.5%. There's a lot of uncertainty stemming from NAFTA negotiations. That's one of the reasons. They want to sit back, wait and see what happens. If everything goes well with NAFTA, there will be an increase before the end of the year by the Bank of Canada. Right now we're at 1.5%. Some big warnings, and we have them in our free weekly newsletter. Get our newsletter from Harold, the companion to the podcast, 1-800-432-1022 or rarecoloreddiamonds.com. Investors can't afford to be complacent, according to Liz Ann Saunders. She's the chief investment strategist at Charles Schwab. She told CNN Wednesday that investors are overestimating the longevity of the bull market, and they're putting themselves at risk. To make the most of their investments, people need to stick to the tried and true principles of diversifying and rebalancing their portfolios. Money that had been invested in the market has appreciated to a significant degree, and there's been no paring back. That's why household exposure to equities is at a historic level. There's never been a bad time to pare back some profit, she added. Investors know that they need to buy low and sell high, but left to their own devices, we tend to do the opposite, as Harold has told us about for years. Rebalancing, Saunders said, forces us to do what we were supposed to be doing. That's the important thing to do right now Don't be greedy. JP Morgan, their top quant, Marko Kolovic, predicts a great liquidity crisis. It will hit the financial markets, marked by flash crashes in stock prices and social unrest. The trillion-dollar shift to passive investments, and he's talking about people moving into ETFs, computerized trading strategies and electronic trading desks will exacerbate sudden, severe stock drops. Central banks will be forced to make unprecedented moves, including direct purchases of equities, or there could even be negative income taxes. Timing of when this next crisis will occur is uncertain, but markets appear to be safe through the first half of 2019. But he's saying there is going to be a great liquidity crisis. We also have another chart, and you can see it in our free weekly newsletter. A 10 to 20% correction could be coming to the stock markets of the United States, the S&P, the Dow, and the NASDAQ. The global finance markets are as vulnerable as they were in 2018, and that is according to Jean-Claude Trichet, who ran the European Central Bank between 2003 and 2011. Europe's top central banker during the 2008 global meltdown has warned, as he looks back on the crisis, there is now agreement that the excessive debt level in advanced economies was a key factor in the triggering of the global financial crisis in 2007 and 2008. The growth in debt, especially private debt, in advanced countries has slowed, but this slowdown has been offset by an acceleration of emerging country debt. And he is very, very concerned that we could have a global financial system that is in meltdown similar to 2008, if not more so. Harold, that is absolutely stunning to me. It does not surprise me, because this is something that we've talked about for a long, long time, that the debt that is out there, nothing has changed from 2007, 2008, and we're in a situation now where potentially we could wake up one morning and be in a situation where we have a liquidity crisis and we're seeing plunging stock markets. As was mentioned by JP Morgan, their top quant, Kolovic, you have so many people in ETFs. You have so many people that are doing the fast trading, in and out, electronic trading. And it's just a recipe for disaster at some point, and we must be prepared.
You better believe it, Randy. It's actually a frightening situation. And we've seen it firsthand, because in 2008, it was really the mortgage crisis that got this whole thing started. When Lehman went out of business and Bear Stearns because of the derivatives market, so the sell-off was substantial, from 14,000 to 6,500 in a very, very short period of time. So there's a 50% drop in the Dow because of the mortgage crisis and the other situations that were happening at that particular point. So how severe is this situation now? Because as a result of 2008-9, not only did the United States have issues, but so did almost every other country in the world, because everything is based off of trading with the U.S. anyway. So all these countries in Europe had similar problems to what the United States had. And then they followed suit when the U.S. righted the ship and did some moves that actually stabilized the dollar and the markets in general and the money markets and things like that. But the fact is, as you just said, Randy, and it's 100% true, that the true problem has never been addressed and it's never been taken care of. So the fact is that the debt keeps getting bigger and bigger and bigger, and countries are not doing more business. They're not able to offset that scenario. So, how is it going to get better? And as the debt gets larger and larger and nobody can pay off that debt because, their businesses are not doing better, then all of a sudden you've got, again, a situation to where the markets can really start to fall substantially. And I think one of the biggest problems is interest rates going up. Because when you have this massive debt, and obviously it costs more to finance that debt because of higher interest rates, that only makes the situation even more dire. So, in my opinion, yes, we could be heading directly to another scenario that was similar to 2008 and 9. But at this particular point, the difference is that with all these countries that are doing poorly in business and in their stocks and their economy, most of the investment money is still coming into the United States. So where these countries are not doing well, people that live in these countries are taking their money out of local markets and investing more in U.S. markets, mainly the Dow Jones, which is why the market has gone from 6,500 to 26,000 without any interruption. So you're right, Randy. It's a very dangerous scenario that we could just wake up one morning and find out like we did in 2008 as the markets are plummeting and there's no end in sight as to how to correct it. I think the next time this happens, it's going to be a major, major fiasco.
There's starting to be a lot of warnings about emerging market debt and debt in general. And the fact that we see Trichet come out and say that there could be another catastrophe similar to 2008, it's a warning. And we've been very concerned for a long time and heed the warning. As that Liz Ann Saunders article says, and you can get it from Harold, connect with him, 1-800-432-1022 or rarecoloreddiamonds.com. We can send out our free weekly newsletter. You can never go wrong taking a profit. Don't be too greedy at this point. We talk in the past on the show about Venezuela being in just terrible, dire straits. Financially, the people living there. Argentina, their central bank raised rates to 60%. As their currency was collapsing, investors are increasingly concerned Latin America's third largest economy could soon default as it struggles to repay heavy government borrowing. The peso is down more than 45% against the greenback this year, and there are serious concerns as inflation is running at 25%. So you can see when things go bad, they will pretty much do whatever they have to, and the people end up feeling the pain.
Oh, yeah, I don't know how in the world you can withstand that. That's totally stymies the country. I mean, nobody can borrow. Nobody can buy a home or get a mortgage or do business or anything. So I don't understand why they would do that with their currency because it's not going to stabilize it and it's only going to make matters worse. But again, they don't have too many outs at this particular point because when you've got that type of inflation of 25%. Now, in 1981-82, in the United States and in Canada, we had very high interest rates. We had interest rates at 22%. Again, try to get a mortgage and pay 22% interest. I don't know how these countries are ever going to get past this. I know that Venezuela is totally gone. They've got 1,000,000% inflation. That means that people are eating garbage there. They can't even afford to eat food. I know firsthand what's happening in Venezuela because I have partners that are from there and they tell me what their families are going through. It's impossible to live like that. And now you've got Argentina that's in a similar situation. 25% inflation is almost impossible to deal with for any length of time. And all of these countries are very, very rich in resources. You know, with Venezuela, it's oil, diamonds, and gold. How much richer can you possibly get? $65 oil, diamond prices are high, gold prices are still at $1,200. Meanwhile, they've got 1,000,000% inflation, and nobody can afford to live there. So these are crazy times, and any one of these scenarios could send the markets reeling. But again, the U.S. tends to shrug off all other market conditions. The only thing that matters is what affects the Dow Jones in the United States. I mean, you could see Trump impeached, and for a couple of days, the market will react, and then it'll just go back to its normal bull stance type of thing. So, that's the difference between the United States and any other country at this point is that they have a market that withstands almost anything. It's very difficult at this point to bring down the Dow unless it was something massive to do with derivatives and, the fact that there's such huge debt within the United States. So we'll have to see what happens, but a dangerous situation all in all. And these South American countries are just dying at this time.
What you could see with Donald Trump, they have the midterm elections coming up in November. If for some reason there is a blue wave and the Democrats take the House, take the Senate, which seems a little far-fetched, but it could happen, then at that point they would be in a position to go after Donald Trump. And if they do find out that some of the allegations against him are true, he could be out of a job, although that is a very dangerous game, impeaching a president. Prefer to beat him at the polls in about 2.5 years' time than impeach him. That would be a real tarnish on the United States. And all the people that voted for him as well would be very upset. So it's a story that will continue, and we'll keep an eye on it for you. $1 trillion, that is what Amazon is worth on a market cap. It has ascended into Apple territory. Apple is worth $1 trillion. Now you have Amazon worth $1 trillion. Chart in our free weekly newsletter that shows how much Amazon has gone up since May 15, 1997, when it was its IPO date, and it's up 134,390%. Jeff, yeah, that's right. Jeff Bezos, richest man in the world. He has a net worth of about $168 billion. Get him to a trillionaire. The stock would need to go to 12,600. Today, it's over 2,000. So it would be a long, long way to go before he became a trillionaire. The thing that worries me, if you're a contrarian the way we are, when you start hearing that Amazon is going to take over the world, they're going to be running everything, to me, that is a warning sign. Similar to pot stocks. Everybody is running towards the marijuana stocks in the United States and in Canada. And everyone is all excited about the FANG stocks and Amazon. Harold, I would say that it's a time to be cautious. I remember Nortel here in Canada. Nortel was so dominant and had a big chunk of the TSX. It took up so much of the index. We also remember BlackBerry, how popular BlackBerry was in Canada and how much it took up of the index. And where are they today? Now, I'm not saying Amazon is going away, not at all. But if you don't think there's competition coming in for them against the Walmarts, Costco, they are in a battle against Amazon, and don't think that they won't be fighting hard to get their share of the market and bring Amazon down. So yes, congratulations to Jeff Bezos and all the things that he's done. Richest man in the world, and obviously brought a lot of prosperity to many other people, including his parents, as we talked about on a past podcast. But I would be very cautious because there are some contrarian signals here and red flags that people should be aware of.
I mean, Amazon is killing the commercial real estate business because so many retail operations are going out of business. So big is too big. Will they eventually have a monopoly? So you're right, Randy. Anything can happen at any time, and we've seen it with major corporations in the past, with Enron and other companies like that type of thing. So we'll just have to see what happens. We're living in a different world today. You've got this Kaepernick situation going on with Nike. When you look at that situation, you would say, number one, why would Nike put themselves in a position to do that? But number two, again, this is a company that does their due diligence. I had to realize that by bringing on somebody as controversial as Colin Kaepernick, there's going to be repercussions from it. And the first attitude of people is, well, is Nike stock going to plummet? And that would be the first thing that you would think about, that you're going to sell off your Nike stock. However, a report came out yesterday saying that millennials are buying Nike. So, it's just a totally different attitude in the markets today because it's not the way it was 20, 30, 40 years ago. We're in a whole new world. And basically, you have to think differently when you're investing. And again, something as simple as either the pot stocks, the marijuana stocks, which again, most people would have to think that's a locked-in winner. If all of Canada is basically allowing marijuana, both medically and recreationally, you would think that Canada is going to do tremendously well just, with the taxes that they're going to charge on selling marijuana. But the fact is that nobody makes any money in the marijuana business at this time. So why would the stocks be a good investment at this particular time? So far, we haven't seen anything like that happen. So again, it's a different world, different type of investment. You've got to look at things differently. Again, my first feeling was Nike stock is going to fall, but then you hear reports yesterday and this morning saying basically that the millennials are now buying Nike. It could sustain the price. So again, it's just totally different now, Randy, and you've got to be sharp and on top of things if you're going to survive in today's investment world.
Nike would not have made any decisions without doing substantial research, checking to see what their main core people that they want buying their product think. They would have done so much research. And obviously they found out through the research that there would be more of a win than more of a loss. And it's bad for football, in my opinion, because I just want to focus on the football. I don't want to focus on the sideshow theatrics. Let's just focus on the game. It hurts the game from a financial point of view, as I listened to an interview with John Taffer, who's famous for Bar Rescue. He was the one who came up with these NFL Sunday Ticket for the NFL. And he said, this is bad business. You don't want to turn people off. You want to be bringing people in so you get more money for your business and everyone associated with it. But the Kaepernick story, I guess they've done some calculations and thought it was a calculated risk they're willing to take. And as Harold said, the main people that are buying Nike are the millennials, and they don't seem to be bothered by it. Connect with Harold at rarecoloreddiamonds.com or 1-800-432-1022 as we talk about rare colored diamonds right now on our podcast. Fancy colored diamonds are so rare and beautiful, they have become a serious investment opportunity, according to Mary Chen, CEO of the Fancy Colored Research Foundation. We have in our newsletter some great articles. True Colors, the 2018 Colored Diamond Report. They talk about how rare Argyle pink diamonds are, as we have been for years and years, and what a great opportunity they are right now. Also, Ella Rosa. They're a company out of Russia. They're trying to go into the Hong Kong market, and they have an array of colored diamonds that they're going to be auctioning off in China. They're a Russian miner, and they supply at least 5% of the world's rough diamonds to China, around 180 million in sales. They're moving into the market of colored diamonds and having an auction. Now, the story that really I thought was outstanding, because they've done it year after year, and it always sells, and it's just always so impressive to see. The Perth Mint unveiled Australia's most expensive collector coin crowned with pink diamonds. Now, the Perth Mint unveiled this investable collector coin, and it's one of the most valuable in Australian history. It's worth about $2.5 million, and it is gorgeous. You can see a picture of it in our free weekly newsletter. It's made of 99.99% gold and contains 4 Argyle pink diamonds. It is absolutely gorgeous. Gold and diamonds, obviously very prized possessions. You get the two of them together in one place, and they believe that this will sell very, very quickly, more than likely to a buyer in Asia or the Middle East. They've done this for a few years in a row. Harold, the picture is in our newsletter. What a stunning, beautiful coin. I congratulate the people behind it, because I think it's just amazing.
Oh, you better believe it is. It's sensational. Just absolutely sensational. And I'll tell you, the diamond business has been around forever. In all essence, is really controlled by the Hasidic Jews that, have been in the diamond business for generations type of thing. And it really never changed. The diamond business has always been mine white diamonds as a rough diamond, sell them to the cutters and the polishers, then they're cut and polished and sold to the jewelry trade. And that's what the diamond business has been forever. We looked at the diamond business in a different way, as a strong investment, especially colored diamonds, because they were so rare, and obviously brought to light the Argyle mine, which is going to close by 2020, and they produce 95% of the world's pinks. So basically, we introduced more or less investing into the rare diamond market. However, that's changing now. Now, we've created an auction site, H. Siegel Fine Auctions, that's been very successful in the past at auctioning off our clients' diamonds. But as economies change, and things changed in Canada for sure, with the Canadian dollar going from basically at par with the US dollar to being down 30%, that affected our auctions in a way, because Canadians had less money to spend on diamonds per se, because diamonds were priced in US dollars, and right away Canadians were losing 30% just because of the currency. Now, when we first started selling diamonds back about 12 or 13 years ago, the Canadian and American dollars were basically even at that time, and when the US dollar went up 30%, so did the price of the diamond. So basically, just on the currency alone, our clients picked up 30%, let alone what the diamonds picked up. But now things are changing again. And we've tried to stay modern and in touch, with the newest ways of marketing and selling. There's something out called a blockchain. And a blockchain is a ledger that is transparent. Anybody could see what's being sold on that blockchain. In fact, major corporations are building their own blockchains. We built our own blockchain. And now what we're going to do is start up our auctions. So all of our clients in Canada that want to sell diamonds at this particular point we will be holding auctions, but on our blockchain. And what this basically is going to do, it opens up a whole new world of investing. And I've mentioned this before, but let's say, for example, a client had $1 million pink diamond that they wanted to sell. In the past, we would put that diamond on our auction site, we would hold an auction, and we would try to sell that pink diamond for $1 million for our client. And we would have to go out and find one client that was in a position to spend $1 million or whatever the cost of that diamond was going to be. However, things have changed, and there's something out now called crowdfunding. And basically what crowdfunding does, and smart contracts, for example, it means that we can now still take that same $1 million pink diamond, we can put it up for sale for $1 million, and instead of trying to find one person that has $1 million to buy that diamond, we could sell that to 10, 20, 50 people at the same time. It's called crowdfunding. It's called joint ownership. So basically, instead of one person owning that diamond, we now have a contract on that diamond saying that we will sell this diamond for $1 million, and in 5 years, we will resell that diamond again for $2 million. And basically, all the people that bought a piece of that diamond will be involved in what is called a smart contract, and it will lay out the game plan for reselling that diamond down the road. Now, out of the $1 million pink diamond, let's say you invested $100,000, so you own 10% of that diamond. If that diamond is sold 5 years later for double the price for $2 million, you have basically made and doubled your money because you own 10% of that particular diamond, and it doubled in price. So it's the way of the future that's here right now. We will start to be holding auctions on our blockchain and H. Siegel Fine Auctions in combination within the next 60 days. And at that particular point, we will be able to offer our diamonds to clients all over the world because we did another crowdfunding project, and we will actually, because of this project, pick up 20 or 30,000 new clients from around the world. So when we start to hold our crowdfunding and our auctions and that type of thing on our blockchain, we will not only be selling to Canadians and Americans, we'll be selling to Russians and Indians and South Americans and Asians all over the world that are now used to buying pieces of an investment. It's almost like looking at a timeshare on a vacation property. Either one person buys the property or 10 people buy the property and share it. That's the way things are going at this point. I think it's the most exciting new concept for doing business. We jumped into it 100%. I put a lot of money into this business, and we feel that it's not the future, it's the present. It's here right now. We've done a crowdfunding, so we know how it works. We've built our blockchain, so we know how that works. We have access to all the diamonds that we need, so we've got that locked in. I think that our clients are going to be ecstatic within the next 60 days that we start these auctions again. And I just think it's going to be sensational. So I'm very excited about it. I know my clients that know about it now are very excited about it. And this is, again, the future that is here today, and we're right on top of it. So this is something that will be starting very quickly. And I know a lot of our clients that are looking to sell diamonds are going to really enjoy doing it in this fashion, because, again, it makes it much easier to sell something to 10 or 50 different people as opposed to just a larger amount for one person. So that will be starting in the very, very near future.
Speak with Harold about blockchain, about rare colored diamonds, the Argyle paint diamonds, the tender underway, traveling around the world. We know that in 2 years' time, the mine will shut down. 90 to 95% of the world's pink's gone. Speak with Harold about that investment opportunity and blockchain too. 1-800-432-1022. The website is rarecoloreddiamonds.com. One final note on diamonds. Bonhams out of the UK is going to be auctioning off a very rare, and this is a rare square cut 5.03 carat fancy pink VS1. It's extremely unusual to find a pure pink diamond of even saturation with no secondary component colors. Weighing over 5 carats, said Emily Barber of Bonhams, the UK Director of Jewelry. They'll be auctioning off that diamond coming up at the end of September. And if we get numbers on that, we will pass them on to you. As we get down to the end of the podcast, a couple of interesting notes. Military hardware company is swamped with orders for bulletproof school bags, Harold. Can you believe that? How
Yes.
sad. How
I
sad.
read that the other day. I was shocked by that.
Israeli company designs military-grade vests, uniforms, and helmets, has developed a bulletproof backpack for students. And I was saying to my mother how sad it is that it's come to that, but by the same token, I guess, if you were looking to protect yourself, maybe it's a good thing that it's there. If you had it, I was saying to my mom, you wouldn't want to tell anyone, Harold. I agree with you. You said a long time ago, back during the financial crisis, don't tell people what you have. That is very good advice. And if you gave your child one of these, you would definitely have to swear them to secrecy because you wouldn't want everyone running for your backpack if you were the only one who had one in a serious situation. But just a stunning story.
Or somebody trying to see if it works and shooting them, or
That's true.
It's just again a sign of the times. The fact that these are now available and we actually need them, I mean, is really disgusting to think that we live in a time when we have to protect our children going to school by bulletproof backpacks. I mean, it's an unconscionable thing, but I certainly see the merits in it because you realize that after the Parkland shootings, which everybody knows was 2 blocks from my home in Parkland, there was 40 other attempted school shootings right after that. That was just last February. So what kind of sick world are we living in when something as heinous as the Parkland shootings at Marjorie Stoneman Douglas High School, to think 40 more people or kids thought that was a great idea and were going to do the same thing. That's how frightening of a world we're living in at this particular point. It's shocking, doesn't surprise me that a bulletproof backpack is now available for children and for adults. I'm shocked that we're at a time in our lives that this is something that we are actually bringing to market.
I was talking to a friend, and she was sort of complaining about a few little things about her child going back to school, and I said, oh, wait a minute. Just imagine if you had to buy your child a backpack that was bulletproof. We're doing all right here in Canada, thankfully. Yeah. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. Get our newsletter this week, True Colors, the 2018 Colored Diamond Report. Take a look at that and talk to Harold about blockchain, what's happening in the world of Argyle pink diamonds. They are so rare and they're going away. So now is the time to take a look at them as a serious investment opportunity. Harold, thank you for your knowledge and another great podcast. We have some football this weekend.
You better believe it. Looking forward to that. I wish good luck to your Green Bay Packers, to my New England Patriots. I wish everybody a wonderful weekend and a very profitable day.
That's it. Another edition of the World Financial Report podcast. For Harold Siegel, my name is Randy Marshall, and we will talk to you next week.